Well, there are lots of siren voices to which the government may or may not be listening to say, well, you need to squeeze some more percent out of the rich, thank you very much. And all those wealthy Americans in the UK with their funny American LLC structures that we don't understand, well, they're ripe for the picking. So go hard.
Welcome to the US UK Tax Talk podcast. Today's episode is a special one-off emergency episode circling back on a topic that we've done previously. That concerns US limited liability companies, or LLCs. In June, HMRC launched a consultation into the taxation of so-called reverse hybrids, which includes principally limited liability companies. And it shows a clear willingness of their intent to engage actively in the question as to whether taxation of these structures should in fact be reformed. I had the pleasure of re-hosting my colleagues James Austen and Henry Lopes, who were on this series about a year ago, to discuss this update on LLCs, what that means for the Anson case, and whether this is finally some light at the end of the tunnel for US taxpayers. We hope you enjoy the episode. Henry, James, good afternoon. How are you both?
Very well, Aidan. Good to see you.
Now, we're having a special emergency one-off episode today. The bat signal has gone out over LLCs and Anson, and who better to heed the cry of the bat signal than Messrs. Lopes and Austen. Thank you for coming in. We're here to talk about HMRC consultations, particularly in the context of the recent reverse hybrid consultation that HMRC launched into largely the taxation of LLCs. And given that both of you were, in fact, my very first guests in the studio talking about Anson, we all thought it was only sensible that we'd all get back around the table together to discuss what's happened in the last however many months it's been since this podcast came out. So thanks for having me.
Yeah, well, it's great to be back and to talk about some happy news for once, good tax news.
Here's hoping. So we're going to take this in, I think, 3 different stages. We're going to take a step back first, and we're going to talk about what consultations are, why HMRC consult, and what the purpose of consultations is, ideally. We're going to look at specifically this reverse hybrid consultation, what it means for taxpayers, particularly Americans, and why, as Jamie rightly pointed out, it is optimistically, cautiously good news. And then we're going to maybe think about what can go wrong if we don't do a consultation in the way that perhaps HMRC has done properly here. How does that sound as a journey?
Sounds like a plan.
Sounds thrilling.
I think it's thrilling. That's why we're doing a podcast on it. So let's sort of start in a very simple question first, Jamie, which is, usually when we're talking around this podcast table and we're talking in our roles as lawyers, we're talking about sort of established law. We're talking about law as it has been enacted. But clearly, law has to change. Law has to grow and develop.
Well, it does change, grow and develop our
relative subjective terms.
It changes in that more law gets added constantly. Tax regimes that once started out as logical and straightforward and clear become less of all of those things as successive governments change them. But we have at least one new Finance Act every year. Otherwise, there can be no taxation in this country. So you're right. Law changes, tax changes.
Henry, not every single tax change is something that the government will consult on. I think that would clog up the mechanisms of government far too much. But what is the government looking to do when it changes the law? What are its guiding principles?
The guiding principles, I look at them in sort of a 2-stage process. Is first come up with good tax policy, and secondly, make sure that good tax policy finds form in good tax legislation. So there's sort of 2 stages to each consultation, which will be a sort of broad, wide policy consultation on the merits of what they're thinking about and how best to achieve those goals. And then a second technical consultation on presenting draft legislation to the tax community and saying, mark our work, basically. Have we got it wrong? So when we're looking at sort of the policy stage, I think there's sort of 3 main aims. Avoid unintended consequences, avoid risks to the exchequer, and sort of ensure the problem that has been identified is going to be solved by this policy. So that's what this consultation is. This is a policy level consultation at this stage.
It's the government saying, we've identified a problem. I mean, It might be a bit much to say they've identified it.
I mean, we've been telling them about
Americans
it
have been screaming for the best part of a
years,
decade that there's a problem. HMRC has finally gone, we think there might be a problem. But they're, in this scenario, with the reverse hybrids, with LLCs, they've gone, well, talk to us about what the experiences you've had and what they've been, and where do you see us being able to improve it on a kind of policy level? Is that a common way of doing a consultation?
Well, it's the gold standard way of doing a consultation. So the system that Henry set out has been for many years, going back to at least 2011, if not before, the way that UK governments have done consultation generally, but it's on tax especially. And tax is a special case because it's so fiendishly complicated. And if it wasn't, none of us would have such demanding jobs. But it is. So all the reasons that you might want consultation on any area of government policy or legislation are magnified in the tax context. The process that Henry described, with multiple stages, with feedback at each stage on the basis of a consultation document in which the government sets out its agenda and its objectives and asks the public, but including experts, what they think about those policy objectives. That is the way that tax consultations have been done and are done very well. And there are some fantastic examples of that over the years. And I have to say, I think that the LLC consultation is an example of that process working at its best.
What I note that neither of you have mentioned thus far is about the popularity of tax changes. This LLC consultation in general, I would imagine to those whom it is largely going to affect, this proposal or the expression of an intent to change the law will be met with positively. To refer us to, shall I say, maybe something we'll come on to later, which is the BPR and APR changes that were introduced by the government last year, shall we say, less popular. Tractors driving down Whitehall would be an example of that. And they didn't consult on that process. We're going to get into why, and I know that you two have a very strong experience of what that process was. But they didn't consult on something, and I suspect had they consulted, all they'd have got back with was a wall of noise saying that's a terrible idea. Do you think that popularity comes into it?
Yes and no. So to answer your question directly, yes, popularity, or the expected popularity or unpopularity of a given measure, might well affect the government's willingness to consult. Consultations they fundamentally happen in a political arena. And just because we as tax lawyers aren't political animals and we don't conceive of tax policy changes in a political sense, doesn't mean that that's the only way to see it. And tax is inherently highly political. And in Westminster, in Parliament, and in government and among commentators, it's politics that will be the primary lens through which tax changes are seen. So they're not going to be desperately keen to consult on something where they know that all they're going to get back is wall-to-wall outrage. Except that it won't be wall-to-wall outrage, because for every person who is positively affected by a given tax change, there will be others who will be only too willing to give their tuppence worth to a consultation, who will be saying, yeah, quite right, and you should go further too.
Especially because it affects those people.
Exactly. I mean, the fundamental political question is, who do you tax and how much? And is that balance right? And if it's not, what are you going to do about it? Well, there are lots of siren voices to which the government may or may not be listening to say, well, you need to squeeze some more percent out of the rich, thank you very much. And all those wealthy Americans in the UK with their funny American LLC structures that we don't understand, well, they're ripe for the picking. So go hard.
Yeah. Henry, do you think also a part of this is a degree of crowdsourcing of everyone's knowledge to try and find answers that are technically sound? I know you were sharing with me prior to the recording ways in which not consulting can sometimes result in a less than perfect policy being proposed, or the second half of the point you mentioned, that the legislation as enacted doesn't always achieve the policy goal, and then there's nips and tucks and tweaks further down the line. Whereas if we go out to a body of professionals, if we seek consultation from stakeholders, I hate that phrase, but the professional community, you're more likely to find answers that are technically sound.
Yeah, you're tapping into a bigger pool of talent who's seen more things over the years than the undoubtedly talented people in government have seen. So they'll be looking at these consultation documents and think, oh goodness, I had a client actually had this specific set of circumstances, and they're really going to get hurt badly by these changes for no policy reason whatsoever. There's sort of a collateral damage if this goes in as it's currently formulated. So absolutely, you are tapping into a much wider pool of knowledge and expertise than is readily available within government.
Yeah.
And you see that I'm looking at the LLC consultation document, you see that reflected in the questions that they ask. They're very technical questions. They're questions that demand of expertise, of practical experience advising people who are affected by the law as it currently stands. That is what they're trying to elicit from us. Not our opinions so much as robust, evidence-based experience from practice. And that is, by the way, a real lesson to anyone responding to government consultations. Pages of opinion, which may or may not address the actual question, aren't likely to be much use. The best consultation responses are those that answer the questions that are put and provide that expertise that the government, including the civil service administration, don't have the answers to because it's not what they do.
I mean, it's very cathartic, though.
Oh, yeah. Absolutely.
The first draft is excellent.
Version 2, much more technically sound.
It does, though. Your question, Aidan, does raise, I think, an important point of principle, which I want to address early. And that's this. With whom is the government seeking to consult and why? Now, stakeholders, the government likes that phrase. They think that lots of people can be stakeholders. They might be NGOs, they might be policy think tanks, they might be lawyers and accountants and barristers in private practice. They might be any number of people. In my view, it's very important that public consultations such as this and such as some of the others we're going to talk about later are with the public. You raised the consultation or lack of consultation on the agricultural and business property changes last year, the so-called family farm tax. And you said, and Henry and I had experience of that. And we do, because we took the government to court in a judicial review on behalf of a coalition of business owners and farmers who argued that the government acted unlawfully by failing to consult properly. It didn't have Henry's sort of phase 1 policy consultation. And we said that was unlawful. Unfortunately, we lost. So the court disagreed with us. They said it wasn't unlawful for a number of reasons. One of the points in that case that was so important to me was the fact that the government hadn't consulted with farmers and business owners themselves. It's not just the Henrys and Jamies of this world that the government should be listening to. It is ordinary taxpayers who are directly affected by the results of the consultation exercise. And in that case, it was, to take one example, farmers. And my old school friend, Tom Martin, who may or may not be listening to this, whose wife is American, hello, Lisa, he and his family are directly affected by the changes that the government has brought in. He had a story to tell. The government would have done well to have listened to Tom's story, but they turned their face against that, as well as to the dry technical tax analysis that Henry and I could have brought.
Is that a political decision? In this, I mentioned before about the popularity. I mean, it does not take a very large brain to say that those who are affected by agricultural property relief are going to be those that own agricultural property. If we were having some really fascinating technical discussion about deeply discounted securities or disguised remuneration, you might think there's not lots of people, everyday people, who are going to want to get involved. But farmers are a well-known and underrepresented voice in this discussion when they're the people who are it's affecting.
Well, take another example. So the other inheritance tax change that came at the same time was pensions. Now, the government
proposed, not yet come into effect.
So the government did consult on pensions reform, and it had a number of very well resourced consultation responses by the UK's large pension providers, and the pension industry advocated very well for itself. It was a model of what you want because they got results. The government changed its proposals as a result of what the large pension companies said they wanted and how difficult they thought the first version of the proposals would be. Now, the consequence of that is that a lot of the burden, if these reforms do come in, that would have fallen on the large pension companies are actually now going to fall on individual executors of estates. Now, there's no one person who can represent all those, thousands of individuals. Henry and I tried. Our firm put in a consultation response on that and gave the benefit of our experience acting for those executors. Time will tell if that response and those like it will achieve anything. But the point is, those who are well represented, those who have large commercial and economic power, can often persuade the government to make changes in consultation. But it's often the individuals, those who might have most to gain or lose, whose voice isn't heard.
So thinking about people who are well represented, particularly by excellent cutting-edge tax podcasts, that being the American community living in the UK, this consultation we have in front of us would be an example of, as Jamie pointed out, a consultation on its first principles done correctly. Henry, I'm not going to ask you to summarize AI style an entire podcast that we all three of us did how many months ago it was, but can you just remind us of the law as it currently stands as regards LLCs and Anson, and why this particular consultation is a breath of fresh air?
Of course. So LLCs, limited liability companies, are a very common vehicle that US citizens deploy in the US. The reason for that, which I won't go into too much depth, not least because I'm not qualified in the US, is because it provides sort of a corporate vehicle, but is taxed as if it was passed through. So the profits of that corporate vehicle are taxed as the income of the members of the LLC, similar in ways to how partnerships are taxed in the UK.
To limited liability
yes.
partnerships, like our firm, for example.
Indeed.
But the law writ large in the UK, for when a taxpayer is in this country and is involved with an entity in a foreign jurisdiction, is that you need to determine the tax or the legal treatment of that entity in that foreign jurisdiction as a matter of law in that jurisdiction. Once you've got that finding of fact, you then map it onto the UK tax landscape, and that then tells you how that entity is taxed. That comes from a case called MEMIC and IRC. So that is the law which you should apply to your LLC interest. And there was a case called Anson which did that.
It did indeed.
And long story short, it went up to the Supreme Court. HMRC argues that this is a opaque vehicle, so distributions from it are dividends.
It's a company.
Exactly.
And that's precisely the point.
And because there was a difference in taxation in the US, Mr. Anson was taxed on the revenue or the profits, in fact, of the LLC as they arose. In the UK, he was taxed on the dividends, i.e. the distributions from them out. So there was an economic double taxation. Supreme Court sided with the taxpayer, saying, actually, these profits belonged, as a matter of UK law, to Mr. Anson as they arose as well. HMRC has distinguished Anson as much as it possibly can and limited it in its applicability to other taxpayers. Various guidance has said as much, that you can expect an inquiry. So UK taxpayers found themselves in a strange position where they had the benefit of a Supreme Court decisions which, on the face of it, told them you ought not to face double taxation on your LLC income or distributions, however you want to characterise them. But HMRC took a contrary view
And that's been HMRC's view for the last 10, 11 years.
Quite.
Yeah, strengthened in December 2023, I think it was. Yeah.
So HMRC are known to have hated Anson. I've never quite understood why. I don't know why they had such a bee in their bonnet about it, because I think I remember saying the exact same words in our last podcast on this. The whole drift of international methods of alleviating double taxation since the Second World War has been to identify and remove instances of economic and or juridical double taxation.
You can see what Americans are trying to do. It's plainly obvious on the face of it how they're taxed in America and why.
Yeah, and we have a similar structure in the UK in limited liability partnerships. It's just that our structure is a partnership model overlaid with elements of corporate limited liability, whereas in America, they've answered the same problem from the other angle. They've got a corporate structure, but with elements of partnership transparency. Neither is right or wrong. It's just what that jurisdiction has chosen. But for HMRC sort of myopically to say, well, ours is right and then theirs is wrong, and we can't see our way clear to taxing it as if it's partnership income, is peculiar to my mind. But the other thing about Anson that's very interesting is people talk about the Supreme Court judgment, which naturally it's the highest judgment, but actually on this, the work was done at first instance. It was done by Dr. John Avery Jones, the very eminent first-tier tribunal judge who decided that case, who decided the facts. That's the first-tier tribunal's primary role. It's a fact-finding tribunal. And those on the facts, as found by Dr. Avery Jones, it was transparent. So almost, not quite, but almost the rest of the judicial history of that case is an afterword to his findings of fact at first instance.
So that's the position that Americans, their tax advisors and their lawyers have been in for the last 10 or 15 years. And much as we spent a long time talking about that podcast, on that podcast episode, trying to carve out arguments, try and work out, does this particular LLC merit benefiting from an Anson position? Is it capable of benefiting from an Anson position? We now have this consultation. We now have this proposal by HMRC to reform the taxation of what it refers to as reverse hybrids. So under the consultation, it itself defines a hybrid as an entity. For some reason, it puts them this way around. A hybrid is an entity that is opaque in a foreign jurisdiction and transparent in the UK, and it calls a reverse hybrid the reverse of that, one that is transparent in the local jurisdiction and opaque in the UK. Why that way around, I don't know, but they've decided to refer to LLCs and I think S-Corps being the other example as reverse hybrids.
Well, I don't know, but I suspect there might be a political reason to that. We know because Henry mentioned HMRC's policy has all been one way on this until really quite recently. 23 was the last update, and it has been stridently anti-Anson. My understanding is that this policy decision to consult on this now didn't in fact come from within HMRC. It came from within HM Treasury, which is very concerned, one understands, about loss of tax revenue of wealthy people in the UK leaving, and particularly Americans, because America is our single largest, well, it's the world's single largest market.
We want an attractive environment economically and fiscally for wealthy individuals to come to the UK.
One hopes and believes that that is what the Treasury would like. So whilst we don't know that the Treasury forced this on HMRC, what we can say is that nothing in this consultation was foreshadowed in any of HMRC's earlier statements on the Anson case.
Or any correspondence we've had with them or any of the analysis we received from them.
Quite.
Yeah.
So one can draw from that what one will, but it is conceivable that this comes from the Treasury rather than from HMRC.
So going into the detail of the consultation, I mean, taking a step back, you've already explained how this consultation was very open in the ways in which it was asking for clarity. There are some common themes. We've all been in discussion quite a lot over the last month or two with tax advisors and lawyers who also work in this space, all gossipy about, what are you going to say, and what do you think, and everything. But, some really quite important questions about LLCs and how they're going to be taxed in the UK that have to be squared really carefully if, to the point you made, Henry, we're going to end up with good tax legislation. Now, we're not going to go through root and branch on all of these things, but there are, I think, a couple of examples of things that need to be thought about that I think it is probably worth chucking around. And this is a talking shop, so if you guys think there's other interesting things, let me know. The one that I think a lot of people have alighted on is this going to be elective or is this going to be automatic? Will taxpayers be required to submit an election like a check-the-box election in the US, or is it automatically treated as a pass-through, I think, as single-member LLCs are automatically? And that's a very, very difficult question, and a lot could turn on that.
Huge amounts. I mean, so our senior partner, for example, tells me every time I say, all right, Anson's great and I don't understand why HMRC is against it, he said, no, it's a disaster. I've got LLCs that absolutely must remain opaque. They must be treated as companies. So if the solution to the Anson issue, the LLC tax issue, is automatic, the risk is that will cause as much damage as the current system, just in reverse. So that to my mind seems quite unattractive. What's the risk here? What is the exchequer risk that HMRC would reasonably want to guard against? I think it's people exploiting a mismatch between tax treatment in different regimes, such as used to happen. Both of you are too young, but back in the day, I remember the round the world schemes exploiting different tax treaties. The India-Mauritius one was a common one.
You could exploit the difference in the US and the UK tax year ends. There's lots of different ways you can do that.
You could. Some of those HMRC would accept are legitimate and others aren't. What I think HMRC will want to guard against is just any hole through which creative tax lawyers and accountants can drive through what they would see as an unintended consequence of someone getting the benefits, an unintended benefit of unequal tax treatment in both jurisdictions. That is reasonable. And so a simple election that's just open to taxpayers to choose as they wish, arguably might permit that. So there's some risk there. But as I say, the other obvious option of just enforcing, let's say, transparency on people might equally cause injustice on people who have ordered their affairs currently on the basis of 10, 15 years worth of law and HMRC guidance, on the basis that their LLCs are opaque. So there's a tricky issue there.
Yeah, and it's funny, a lot of these things are quite administrative in nature. Things like, is it an election? Who makes the election? By what date must they make the election? Can that election have retrospective effect? It's all quite bureaucratic.
Yeah,
a lot
can
of
it be amended from year to year?
Can different participators have different elections made on the same LLC, or does the LLC have to make the election? That's a lot of stuff to work through when you're in effect, because I'm not aware of there being a similar area of law or tax policy currently where you can make elections in this way being crafted anew out of existing legislation.
The one that comes to mind was an election into deemed domicile by a surviving spouse. Mm-hmm. That was new, brought in to deal with a specific issue which arose on a change of the law. So it's not without precedent, but it is quite rare. And you're right, I'm not aware of another live new issue currently. But some of those people that you mentioned, Aidan, will not always be taxpayers in the UK. So the LLC itself, for example, it's incorporated in a state in the US by definition. if it's not managed and controlled in the UK, it won't be UK resident, so it's unlikely to be filing UK tax returns itself. On what basis, or what's the methodology if it's the LLC that has to make an election? Things like that cause people in HMRC who design taxes and tax administration, it gives them the shivers, because they've got to introduce new procedures to deal with this. And there's huge amounts of work. I mean, vast, untold amounts of cost to make that happen.
So given what we're talking about is vast amounts of cost and manpower to enact those changes, at time of recording, we still have a relatively fledgling sort of new government, shall we say. We have a new Prime Minister, we have a new Chancellor of the Exchequer, we have a reshuffling of cabinet. I'm not going to suggest that Mr. Burnham's highest priority is going to be dealing with the reverse hybrid consultation, even though we might think it's very important. To what extent, when we're talking about allocation of resource, time, manpower, should we expect that this is going to delay, defer, obfuscate, or otherwise cause this to be kicked into the long grass?
I think Jamie should answer that question more fully, but before he does, I think it's worth noting that this is a somewhat unusual consultation in terms of tax policy, and that is almost certainly revenue losing for the government. And that is, I say almost certainly, the crystal ball maybe gets put away a little bit.
So if you're HMRC, you know the cost of everything that you can measure in direct terms. In terms of tax gained or lost specifically from this measure, let's say income tax, for example, HMRC's current policy view is that income tax should be paid in full in the UK on LLC distributions with no credit given for tax paid in the US. In their projections, they will include those tax amounts. The consequence, if a change comes about and it enables a double tax to be avoided, almost certainly by a credit methodology, because that's the easiest one that's available to us, that the treaty makes easy, and it's well known, it's a well-trod path by us all. The direct consequence is that income tax receipts will drop as a result. It's almost inevitably the case that they're not going to increase. Now, is that the end of the economic consequences of the change? Well, I don't know. HMRC doesn't know.
We might have more taxpayers on which we can levy tax because more Americans come here. It could be that people are more keen to use these structures, and so therefore there's more wealth held within them.
All of those things are possible. Modelling them is very difficult. Now, we're lawyers. I mean, I don't have the imagination to be able to model things like this. I mean, the number of variables is just so enormous. But there are people whose job it is to do that, and hats off to them. And one hopes that the UK government has some very good people doing precisely that, and that there would be an overall economically positive outcome to any change following this consultation.
Do you think the IRS is a stakeholder in this? Because the revenue in the UK is going to go down, and we're giving that by way of a credit. There's also an argument that the IRS is going to lose out because there will be circumstances where the UK will now want to take its tax. And I wonder about the extent to which the UK, whether at a political level in its relationship with the US generally, or on a technical level between taxing authorities, whether the UK takes into account any view that the IRS might have.
And you need a savings clause alarm bell that buzzes up when that sort of...
We'll come back for a third time. We'll do a savings clause episode.
That is a fascinating question to which we can only glimpse at. If we knew the answer to that, that would be a podcast series, a mini-series of itself. Is the IRS or the US federal government going to put in a consultation response to the UK government's consultation telling HMRC what its view is? I mean, brilliant if they did, but no. Is there, or ought there to be, liaison between the two administrations and a two-way feedback of information on their respective positions? I mean, one really hopes so, because if not, that's pretty awful.
Amendment to the treaty or something like that.
Well,
who knows?
because you're absolutely right, Aidan. There's another really interesting question underlying what you said. That I think you're right. I think the IRS is a stakeholder here. I think it has a very vested interest, because we've got matters, the three of us, where we're working on together, where there is some doubt, frankly, as to whether individuals, US individuals in the UK, ought to be paying tax to the IRS, as they almost invariably do, or ought to be paying it to the UK, and the extent to which the savings clause in the treaty, US-UK double tax treaty, should apply. Now, if the UK decided to play real hardball with the IRS here, I think logic is on the side of saying, well, actually, I think a fair number of those people ought not to be paying tax in the US at all. They ought to be paying it in the UK, and the IRS needs to be giving treaty credit. Now, that is almost invariably not what happens in practice. Is it an obvious consequence of any change following this consultation? I think it's a possible consequence of it. And from HMRC's perspective, it might alleviate some of the tax downside risk from other lost income tax receipts. But is the IRS likely to have, the US federal government likely to have views on that? Well, you'd have thought.
So just steering us slightly back on course, because I appreciate, Henry, I interrupted you at one point when you were going to talk to me about revenue-raising powers, and we went on a side tangent about the IRS. Let me bring us both back together in sort of the final bit about, I think, this consultation before we circle back to any other consultations anyone might want to talk about. What do we think the change of government means for this consultation? What do we think the change of government means for consultations more generally? Because I know there have been press releases recently about actually, for all the good we are talking about this lovely reverse hybrid consultation, isn't it wonderful, and don't we wish the government would do more things like this? I'm led to believe that we shouldn't necessarily get our hopes up.
So there's a new government in. That is not breaking news. And this consultation was launched under the old government. There are good principles of law of why that ought not to make a difference. Jamie can talk more about those. But there is a risk. There's a new team in town, and they may comply with the consultation to the letter of the law, but for performance reasons only.
I mean, a consultation is just a consultation. There is no legally binding
You are not bound. There's
political
some good administration principles which you are bound by.
These are things that Henry and I get excited about because we fought a judicial review on them.
But all I wanted to say is that the policy objective here isn't necessarily about raising tax. It's about alleviating economic double taxation. And you can imagine a world in which that measures of those types in this political context fall by the wayside.
Yes, I would have thought that's probably right.
So picking up on the points of detail that I get very excited about, a formal government consultation was launched. That consultation included promises. So, for example, on the very first page of the condoc, after the consultation, the government will publish a response to the consultation in due course. In due course could be,
sure,
the day before Kingdom Come, but in due course. All respondents will be listed within that document. So the government has made a commitment to the people who responded to the consultation that it will respond. It has a public law obligation to fairly consider the views expressed, and it has committed to responding to them. It must do so. It would be unlawful for it not to do so. Now, the problem comes, by what date does it become unlawful if nothing happens and someone wants to challenge the government on this? When can they do so? And that's almost impossible to answer. And the reality is they can't challenge this. But nevertheless, the government does have a public law obligation to do what it said it would do. But you're absolutely right. In terms of outcome, there is no guaranteed outcome. And one can imagine a world in which a reinvigorated HMRC rejection of Anson is put out, explaining the reasons why HMRC think that economic double taxation is the right result here. It's possible. So just because there's a consultation doesn't presuppose any given outcome. But I think that it would be surprising if the new government were to jettison the approach and ignore it.
I mean, particularly if we think that the underlying principle is that we want to encourage inward investment and make an environment less prone to double taxation, etc. I mean, I know of no reason. I do not know Mr. Starmer or Mr. Burnham personally, but I know of no reason why that would be a difference of approach towards investing in the UK from either government.
I think it's worth saying what this consultation doesn't contemplate is not tax breaks for individuals. Yeah. It is avoiding crazy rates of economic double taxation. I can't remember the theoretical limit.
It's 45% in the UK on top of whatever the marginal rate is of federal income tax in the
Very
US.
high, where it becomes so unattractive that you may leave the country or not come here. That's what we're trying to avoid here. We're not handing out cash to rich Americans saying, come on over here and then, I don't know, send your kids to school here. It's not what we're doing. It's a fairness question.
Given that we think consultations are a good idea, why might we not see as many of them in the future, Jamie?
Oh, Aidan, this is sad face, Jamie. Because the last government, the Starmer administration, whilst Henry and I were fighting our judicial review on the lack of adequate consultation for the family farm tax, they put out a new policy document, a statement of their approach to tax policy. And that was called the Tax Policy Consultation Framework.
Yeah, something word salad.
And that, 2025, that replaced the 2011 Tax Consultation Framework, which set out the previous approach, which we said in the JR made specific commitments to taxpayers to consult in certain given scenarios. Now, unfortunately, we didn't manage to persuade the High Court of our analysis, and they disagreed with it. I have to say, not engaging in any great depth with the real level of detail in our argument. It's a fairly superficial judgment, I would say, but nevertheless, that's what they said. Crudely, let me put it like this. Under the tax consultation framework, the government promised to consult on the model that Henry described at the beginning. Before major tax changes, not including run-of-the-mill, percentage up or down on income tax, for example, more small matters, on anything major, taxpayers had a right to expect that the government would always have at least two full public consultations. And we know what's meant by a public consultation. It is a policy paper with a period of time for the public and interested parties to respond. That's usually 12 weeks, following which the government will consider and respond to the consultation, publishing its conduct response sometime later. And then after that, draft legislation will be introduced, and there'll be technical consultation on the draft legislation. So that's what, broadly speaking, the tax consultation framework said it would do. The tax policy
consultation framework, I think you called it.
No, it's not that. No,
it's the new one.
The new one.
The TPCA.
The 2025 document scrupulously avoided making a single binding commitment other than one. It said we will have a finance bill in every year, which we have to have, otherwise we can't have tax for constitutional reasons. So they promised something that was an absolute given, but they have, without exception, removed every instance in the earlier tax consultation framework where the government, we say, made a proper commitment to consult. And what are the reasons for that? Well, we don't know because they haven't told us. They would like other people to consult with them on tax. one infers that they particularly have in mind think tanks, especially congenial think tanks to them and academics. And in some cases, those are the same thing. Certainly in one case I can think of. They don't say anything in the new document about consulting with the public, which I think is quite striking by its absence. They make much of the straitjacket, my word, not theirs, of the public consultation model, which they say doesn't suit the modern world. And they want these lots of buzzwords like agile and flexible, and may even use modern, I'm not sure. They want agile, flexible models of consultation, to which the skeptic, like me, thinks you just mean your mates coming round to the Treasury where you can have a good old chinwag about what you want it to look like, and that's that. And it's all done behind closed doors.
There's smoke, there's cigars, I'm
exactly.
imagining. There's a billiards table in the middle.
Beer and sandwiches, maybe.
Beer and sandwiches.
And for anyone who thinks that transparency in government is a good thing, and I unashamedly do, because unfortunately I feel you can't trust politicians always to do the right thing unless they know they're being scrutinized. This is a bad model. This is a huge retrograde step on what we had before. So I was delighted to see the LLC consultation come out, because it's an indication, I hope, that the old known positive public consultation model isn't dead. It still has value for all the reasons that have always been the case. And we did say at the outset, we would talk about some of the reasons. We haven't. Why would you have a consultation? Well, it's to fundamentally get better legislation. That's really at the root of it, particularly tax legislation. It's so easy to get wrong. There are 99 ways to get a tax consultation wrong and only one way to get it right, usually. And finding that one way is hard work. So the more expertise you can bring to bear on that, the better. I hope that the LLC consultation, if something happens of it, will be a model of that process working well, to remind those in HMRC and the Treasury, this is a process that has value. It is genuinely beneficial to taxpayers and government alike. And because it's conducted in the open, that there is a value to be had in transparency. And that, I'm afraid, is at odds, in my view, with the new tax policy framework.
So I guess last question, Henry, for you. Does that mean I'm not going to see my consultation on the taxation of revocable living trusts anytime soon?
Oh, well.
My dream.
I think I did say this to you in the office at some point. The definition of reverse hybrid is sufficiently wide, perhaps, that no, I don't think so.
And also, the consultation window is now shut, so I don't think there's any chance. I would be surprised if someone hasn't tried to sneak a revocable living trust into the consultation document. I'll be sad if I don't hear from that from some colleague.
So I disagree. I hate to be the contrarian. I mean, once upon a time, I was a proper trust lawyer. I used to know stuff about trusts. And a trust is a trust is a trust. And the question as to whether, given trust structures, in this case, US revocable living trusts in the way that we all know them, but which are very varied in practice, it's just a construction question, applying standard principles of public and private international law and construing foreign structures. And we just map it onto it's a known exercise.
So what I think, Jamie, I'm hearing you saying as a partner of Collyer Bristow is we need to find the new Anson, and we're going to litigate this to the Supreme Court, and we're going to end up with new case law that we can all then rely on for 11 years until there's a consultation in 2037.
Sadly, I don't think so. I don't think that's likely either, because I think the reality is these structures either are settlement trusts or they're not, on established principles. The difficulty isn't conceptual, the difficulty is practical, in that did the US draftsperson putting together a given trust document, had they applied their mind to how this entity was to be treated under other legal systems, the answer almost invariably, certainly the ones that come to me are the ones where there is an issue, but almost invariably the answer to that is no, they didn't. And then the question is, well, how does the UK tax those structures? I can't see that question ever needing to go away. I can't see that it's likely that the structure, the sort of approach that will work for LLCs could possibly work for US revocable living trusts. But maybe you and I should have a different podcast or some other format. We could have a sort of, I don't know, boxing match or something.
I think it's just called Aidan Grant's Christmas list.
Yeah.
I think instead. I'm now regretting opening up that can of worms, but actually I think it probably is a good idea because we should do more on it, because I've not talked about living trusts on this podcast for, at least 10 months, I think now.
And we've got some very interesting current examples of work that we're doing right now on precisely this question. So Henry and I have got a Massachusetts law trust at the moment. Is that a settlement or is it not?
Well, Jamie, if you were slightly easy to pin down to host on a podcast, I would happily do this with you more often. We will leave that for another episode because we only have so many hours in the day and you all have jobs you need to get back to. I'm just trying to, fashion myself as a full-time podcast host. Henry Lopes, James Austen, thank you so much for coming in today.
Thank you.
Thank you for joining us today on this US-UK Tax Talk podcast, and thanks to Henry and Jamie for coming back for this special one-off episode. A reminder that we're now releasing podcasts on the first Wednesday of every month, so make sure that you like and subscribe this episode, and that way you won't miss any of our new ones. You can also give us a thumbs up or a like, leave us a 5-star review or a comment. We're always really grateful for feedback, and that helps the algorithm promote the podcast more generally. Finally, a reminder that we're also on YouTube, and you can check out Collyer Bristow's YouTube page for all the latest episodes in video format. Until next time, thanks very much.